Good day. I'm Martin Gago with Market Radius Research. It's Tuesday, April the 12th. Today, we have Canada Jetlines Operations joining us with CEO Eddy Doyle, CCO Duncan Bureau, and CFO Percy Gyara of Canada Jetline Operations. Canada Jetlines is a new airline expected to start in the summer of 2022. Targeting leisure travel to the US, Mexico, Caribbean, and Canadian cities. I'm eager to learn more about the company and excited to have them here as they are launching into the Canadian leisure jet market. The airline business is notoriously complex and risky, but the industry has seen numerous new airlines launch globally and succeed with a smart and focused business plan. I'm hoping to learn a lot about the airline industry and CJET strategy. And I'm thinking that at these early stages, could be some good investment opportunities, especially as the world comes out of COVID and we all look to catching up on the travel that we've missed out over the past 2 years. Gentlemen, thank you very much for joining us. And please tell us about Canada Jetlines.
Hi, good day, Martin. Thanks for having Duncan, Percy, and myself to get a chance to talk to you and all your subscribers about this great new airline that we're starting. We have a presentation here that we're going to run through. Let me start with the boring stuff, the forward-looking statement disclaimer. I'm not going to read all of this, but we do believe the information contained in this presentation is reliable. However, it is for information only and does not constitute an offer to sell or to a solicitation to buy any securities. So with that said, just a quick overview of Canada Jetlines. It's a new Canadian airline with a focus on the leisure market, and we'll talk a little bit more about what we mean by that later on. We think we are perfectly positioned to capitalize on the rebound and rapid growth in leisure travel. We do know that there is a lot of pent-up demand out there, especially after people being locked up for 2 years. So people are looking forward to finally going on a trip. We have a highly experienced management team and what I would describe as a world-class board of directors. And I will also go in more details in the presentation. We plan to commence operation in 2022, subject to having finalizing the CTA and Transport Canada approval. The fleet we intend to operate consists of Airbus 320, and just a quick overview, our forecast is to operate 15 aircraft by 2025. The post-pandemic era offer great lease opportunity for aircraft. There's a lot of aircraft in the market right now. The market has changed compared to 2019, where you pretty much had to beg to find somebody to lease you an airplane. Now it's the exact opposite. So great opportunity for Canada Jetlines here to secure attractive rates on the lease. We do have a relationship with Global X, which is a shareholder in our company. This allows us to negotiate multi-company agreements, and I'll give an example of that later on in the presentation. So, like to say, timing is everything, and we do believe that the COVID pandemic did create the best opportunity to start this kind of airline in the last 20 years. As I said before, the focus of this airline is on the leisure market, sun destination, with aircraft, assets, people, and service contract at post-COVID rates. We'll also get to start with a clean start without the debts or voucher that established airlines have accumulated during the last 2 years, which was horrific, as you well know, for airlines and people in the travel industry in general. We were very successful at recruiting a very experienced management team, from the executive to our directors. And we do believe that when you look at all that, it does provide us a great cost per available seat miles, a price advantage, higher margin versus competitors. A little bit about the financial structure, a bit of history here. So Canada Jetlines operation was only owned by Global X until about 9 months ago. To create a Canadian airline and get certified, there's rules on Canadian ownership. So Global X, which is based in Miami, spun out the company last June. And we did the first raise of capital in July, just to have working capital as we go through the process of getting certified with Transport Canada. We got listed on the New York Stock Exchange in October. And a quick overview, we have about 50 million, just over 50 million shares outstanding, fully diluted with warrants and RSU, about 69 million.
Eddy,
yes.
Who exactly is Global X? Can you just give us a bit, quick summary on who they are?
Yes, Global X Airline is a new airline specialized in ACMI, which is basically leasing the aircraft crew, taking care of maintenance and insurance to anybody who wants to lease an airplane. They got certified and started operating last August, in August 2021. And they're also listed on the NEO Exchange. So, this is who Global X is. Basically, they acquired Canada Jetlines Inc. about 2 years ago. That was the company that owned Canada Jetline operation, the airline. And as I said before, to start an airline in Canada, they had to spun it out because you cannot have a Canadian airline fully owned by a non-Canadian entity.
Okay, so there's ownership regulations on Canadian airlines, or like there are on banks and telcos and that sort of thing.
Exactly, right. So not more than 49% of the voting rights can be owned by a non-Canadian, and one foreign entity cannot own more than 25% of the voting rights. So when you look at Global X today, they own about 16.7% of the shares in Canada Jetlines after we raised the capital.
Right.
Mm-hmm. I want to talk a little bit about our board of directors because it's a very talented board of directors. So I thought it'd be good for me to touch on that a little bit. Ken McKenzie, our chairman, very experienced in the airline industry, used to be a chief operating officer at Spirit Airlines and at WestJet, and also was a senior VP with Airbus America. We have the Honorable Jean Charest, probably doesn't need any introduction. Jean Charest was Premier of Quebec for 8 years and Deputy Prime Minister of Canada in the early 90s. We also have Peggy Gilmore. She's the chair of our audit committee, lots of experience, was the chair of the Institute of Internal Auditor, the Toronto chapter, has experience in the banking sector. They're all independent except for me. I'm the only non-independent board of director members. We have Beth, former CEO, Beth Horowitz, former CEO of Amex Bank of Canada. David Crushell, who is the CEO of Frontier Lodging. David, tons of experience in the travel industry, worked in the consulting and direct travel, was started his own travel company in out west there, and a ton of experience basically in that industry. We have Ryan Gopal. Ryan is CFO at Global X, so very well, very knowledgeable about the airline industry also. And we have Ravindra Minas, very successful entrepreneur, started Minas Brewery with his sister back out in Calgary. As for the management team, the executive team and myself, over 35 years of experience, actually more than that by now, I'm getting older. Started my career as an Air Force pilot, moved to Air Canada in 1989, retired from Air Canada as VP Flight Operation. And then after that, went to Vietnam to start Bamboo Airways, an airline based in Hanoi that we quickly grew to 25 aircraft within the first year. Everything moves fast in Asia. And receive award for the best service in Vietnam, best on-time performance, very successful new airline in Vietnam. Duncan Bureau, who is with us, is our Chief Commercial Officer. Duncan was president at Air Canada Rouge, vice president at sales at WestJet, also worked as a senior vice president at Etihad and with Malaysia Airlines. So everybody knows Duncan in the travel industry, especially in Canada. Percy, who's also with us today, is our CFO. Percy was VP Finance at Sunwing and also worked at Sky Service Airlines prior to that. Our VP Flight Ops is Vic Charlebois, tons of experience in the airline industry, knows what needs to be done to start a new airline dealing with Transport Canada. He was VP Ops at Canada 3000 prior to this and Zoom Airlines, tons of experience there. And Brad Warrens, our VP of Maintenance, was Managing Director of Maintenance at Air Canada and VP of Maintenance at Air Georgian prior to this. So as you can see, a very seasoned executive team when it comes to having experience in running and establishing an airline.
Eddy?
Yes, go ahead.
Sorry, I'm going to take it sort of offline here, but I just had a request that Ryan Gopel, one of your directors, is going to be joining you, the panelists here. So I just sent him an invitation and he'll be hopping on. So just FYI. And I guess just a commentary on your board of directors, very established group of people with, and I just want to highlight, there is obviously with Jean Charest there are people with regulatory and sort of political connections as that's part of it. There's travel and finance expertise on there. So these are kind of the core attributes that are needed to sort of help make an airline successful. And then on the management side, just lots of operating experience with some very successful airlines. Are those is that what we should be taking out of it, that these are the key elements that the company needs to help its success?
Yes, as you can imagine, starting any business is a challenge. Starting an airline is that much more challenging. It's very regulated, it's very technical. So having, a very experienced executive team is important, but also to be able to reach out to a very seasoned board of director, right, is helpful, especially when you're starting a new company like this. And when you look at the composition of our board of directors, there's, all sorts of talent. Like I mentioned before, David, ran very successful travel agencies, so he knows the commercial side of the business very well. Our chairman has lots of experience on the operations side, having been COO at WestJet and Spirit Airlines. So, it's somebody we can talk to. We can come in and help out when needed. And, our Ryan, who's going to be joining us here, CFO at Global X, is not a great resort. So all of them bring their own experience and talent to complement the executive team.
Great, thank you.
A little bit about the Airbus 320 and the fleet, what we're planning. So we have one aircraft that is here in Canada right now. We are planning to have 3 airplanes by the end of 2022. So 2 additional airplanes coming in the fall, late fall, so that they're ready for the always busy December month. And then after that, we're looking at adding 4 aircraft per year. 320 is an excellent airplane. It's, it's well-renowned. It sold thousands and thousands of copies of that model out there. It offers the flexibility also to have an Airbus 321, which is basically a stretch 320. So the crews can move from a 320, 321 without any real special training, because it's the same airplane but stretched. So it does offer great flexibility from that point of view. If we desire to acquire 321 in the future, not that we have any plan for it right now. Cabin is a little bit wider than 737. It sits higher, so it's a great experience from the passenger point of view. And we configured the airplane with 174 seats. So you can put 180 seats in that airplane. But given our business model, we thought it was important that we give that, just that little bit extra space for passengers so they're comfortable, especially when you do a flight to Cancun, for example. It can be a 4-hour flight. So the brand is really important for us. The customer experience is really important. And that's the reason we decided to take a roll out and limit the aircraft to 274 seats in an all-economy configuration.
Eddy, sorry, with that, if you take out a row of seats, everybody just gets a little bit extra leg room.
Exactly, right. Exactly.
And on that airline, it's really important, I believe, that an airline, especially when you're smaller, that you have the same plane everywhere. So for maintenance and training, that you're not, oh, these guys can only work, because certain pilots are configured or trained to fly a Boeing, whatever, 737, and other guys are for an Airbus. So if you've got a whole mix of flights, it creates confusion, higher costs, scheduling issues, and so forth. So with a consistent plane, and then you could get bigger with the one.
You do get economy of scale.
Yeah.
It's easier to run the operation. You save on not having to have pilots that are trained to fly one airplane but cannot fly the other one. Your maintenance costs goes up when you have different aircraft types. So staying in the 320 family, consists of 319, 320, 321, allows you to have some flexibility, and yet maintain your costs and your operational flexibility. So, and that's the reason why we chose that aircraft.
Right.
And we intend to stay with one aircraft type. Our first aircraft, you see a picture of it here. We did an 8-year lease. And as I mentioned before, the market is certainly a great market for new airlines to go and lease airplane today, not only on your basic rent that you can get a deal on because the supply is so big out there, but also you can get flexibility on your clauses. And one of which is we managed to get a deal where we pay by the hour in the first year. So if we don't fly the airplane, for example, the first 3 months, our basic rent is 0. And that will increase after 3 months, where there's going to be a minimum rent, and with a maximum rent being your basic rent. So flexibility there, so that we pay as we use. We will install a great wireless entertainment system in the aircraft. It's just about to go in. And I mentioned before, the customer experience is really important for us. And what we did is we reconfigured the airplane with the brand new Recaro 3530 seats. And not only did we take a row out to increase passenger comfort, but that slim seat design with higher pivot point also give a little bit of extra room for the passengers, and provides, I'm 6'1", I can sit in the economy seat, and I still have room for my needs. So, and what we did, sorry for taking a little bit of time to talk about the seats. We're really happy with this product. We installed and as you can see the picture there, an iPad holder. So we have a wireless entertainment system. People can use their phone or their tablet. And as opposed to having to hold their tablet for the entire flight looking at the movie, they can install it. And at the back of the seat, there's a little table there. You can rest, a little clip. You can rest your iPad or your tablet and watch the movie there. And there's also USB power, so you can charge your phone or your tablet during the flight. So we're very happy with this seat. I think it will be very well received by our customers.
Eddy, sorry, just going back to the seat, I've noticed that on some planes and versus, I guess, older planes, the older planes, their seats, like with the big cushions and everything, it was like 3, 4, 5 inches thick and so forth. And on these planes, and I've seen on other more modern planes, it's very thin. Like the seats are still comfortable, but basically they thin out the backrest and make it a little more compact. So again, adding to the legroom.
Yeah, absolutely. The new seats, as you can imagine, it's not cheap to get a new seat installed. but it does maintain, a good comfort level. It's a nice leather seat. It's great, very comfortable. But the entire frame is improved. And like I mentioned, the pivot point for the table when people use the table to eat is at our point. And the entire design of the frame basically allows a little bit more leg room also. So, we see it as a very good investment.
Right.
Talk a little bit about the different contracts that we set up. One of the big costs of running an airline, as you can imagine, is your maintenance side. And many airlines, what they will do is they'll create inventory of parts. You need to store it. You need, you have parts, millions of dollars of parts sitting in storage just in case a part breaks. As you can imagine, there's tons of different parts of an airplane. So picking up the right one that you think is important to have to maintain a good dispatch reliability, that can get very expensive. We managed to do a part pooling agreement with Lufthansa Technik. Lufthansa Technik is one of the largest companies in the world, very reputable. And basically, that will provide us, they take care of all our parts. We'll be here in Toronto. They manage all this. It's part of a pooling agreement. They offer the same service to other airlines. So if something goes wrong with the airplane, we need to replace a part, we just give them a phone call. They bring it, from their facility in Toronto to the ramp where the airplane is parked. And it allows us to give us that operational certainty without having to maintain a huge inventory of parts ourselves. So very creative deal that was done here by our VP of maintenance, and certainly helps us, for a small airline to get started, to avoid a lot of the cost of having millions of dollars of parts sitting in a warehouse somewhere that you may or may not use. I mentioned before opportunities of having this relationship that we have with Global X. And one example here is the contract we negotiated with Trax, which is a maintenance software company. We managed to negotiate a multi-company deal where they provide the software to us and to a Global X. So that allows a lot of money in the saving and setup costs. And we get to, despite being a small company, by putting Global and ourselves together, managed to keep our costs to a minimum on our monthly costs with Trax to manage our maintenance software. That's one example. The other example that with Global X is the ability to work together and look at airplanes that are out there in the market and approach all sorts of vendors. And where it makes sense, we can do multi-company deals like that. So moving on to other contracts.
Eddy?
Yes.
Sorry, just going back to the maintenance stuff. Do you hire your own service technicians in that, or is that outsourced to the Lufthansa Technik, or do you or is there an airline garage service company that does maintenance stuff for you?
So when you look at, sorry, I didn't want to spend too much time on the slide because I know we're going to have a question. The line maintenance will be contracted out to FL Techniques, that is on this page. So they'll take care of our line maintenance. We have a director of maintenance here. We have a VP of maintenance that take care of the supervision of all this. But until you grow the airline to a size where it does make sense to have your own maintenance personnel, we will keep contracting out the line maintenance.
Right. And that keeps it more of a variable cost. You only need it when you need it. Exactly. And it fits the whole business model better at this point.
Exactly.
Yeah. Makes sense.
Mm-hmm. One of the pearl that we found out there, and Duncan will spend a lot of time, I'm sure, going in more detail on this software that we bought is SysAIO. And that's an airline suite software provider. And what I mean by that is we don't have a different software provider for our reservation system, and then a different one for departure control system, another one for crew scheduling, human resource accounting, and you got to try to build APIs so they all talk to each other, right? We spend a lot of time looking at this company. It almost seemed too good to be true initially, and I think we spent 2 months analyzing this software suite, and we decided to go with SysAIO. As so many modules that provide us with everything we need, that talk to each other, that allows the executive team to have a look at, okay, what's our on-time performance today? What's our forward booking? All this in one. Great view of the customer. I'll let Duncan talk about it a little bit more, and touch on the operation module that we need also. The other contract that we have that is really important for an airline is with NavBlue. Now, NavBlue is a subsidiary of Airbus, so we fly Airbus airplanes. So it was a natural choice to go with NavBlue. They will provide us with not only our flight plan, our weight and balance, our electronic flight bag for the pilots, so they can see their charts, they can see their flight plan on their iPad, it provides live tracking of the airplane and performance data. So that's very technical, very operational, but also very important for the airline. And of course, we already have in place different contacts for payroll, accounting, pilot training with CAE. CAE, a Canadian company, is probably the largest company out there to. At one point, they had 80% of the market of simulators. They were building 80% of the simulators sold in the world. And Seneca College for our flight attendant training, we're using their facility. They have all the door trainers and so on. So we signed a contract with that. Seneca College being based here in Toronto, so it worked out very well.
With these systems, the first, sorry, could you go back? Yeah, to the CCO one. Like, one of the key drivers of an airline's profitability is their yield. You get as many people in the seats as possible. Like, you're not flying half-empty planes around, and not being late because you get charged fees by things. So having a good IT system with inventory, with scheduling to maximize everything, that's pretty key to this. And you're thinking that the CCO is a good tool that's going to really help drive some of your key metrics.
More than a good tool, it's a great tool. We're really happy with our choice here. And like I said, we must have spent 2 months, trying to break it apart, see what's wrong with the system. Duncan spent a lot of time. We hire a consultant to look at all the aspects, all the modules that touch the commercial side. We had the people here that had experience with them on the operation side, so we knew it was a good system on the operation modules. We wanted to make sure that the commercial modules were just as good.
Yeah, sorry, Martin, I'll just add that, we hired a guy named Dr. Hugh Dunleavy, who has an incredible amount of experience, David Kershell and myself. And as Eddy said, we spent a lot of time going through this system. Every time we thought we would break it, the developers showed us that not only could the system handle it, but actually did it incredibly well. And so, to Eddy's point, our due diligence on this system was incredibly important because of the importance of the PSS to the rest of the organization and the success. The fact it's also our DCS just made that system that much more powerful, enables us to merchandise and display our inventory in a way that will allow us to maximize yield. So an incredibly important system, and really at the heart of the airline in terms of it talking to every other system that we use as a company. So it was a very important choice, and we spent an inordinate amount of time evaluating it.
You had a couple acronyms, and I'm going to hit you guys up with acronyms. You mentioned PCS and DCS. Could you just, what are those?
Yeah, sorry. PSS is the system we're talking about, which is CISA AIO, which is our passenger control system.
Okay.
And the DCS is our departure control system. And in our case, it's one system that talks to each other. And Eddy had already mentioned that, you know, it gives us a competitive advantage. We can follow the passenger through their entire journey with us, which will give us an advantage from a competitive perspective as it relates to managing the experience of the customer and being able to communicate with our guest as well. So it's a very sophisticated system that gives us a significant advantage.
All right, thanks.
All right, let me run through the next couple of slides quickly so I can turn it over to Duncan to talk about the commercial strategy here. Two parts, two processes you need to follow when you start a new airline. One is getting a commercial license from the CTA, Canadian Transportation Agency. The other one is your air operator certificate with Transport Canada. So the CTA basically consists of two stages. First is, you need an assessment of Canadian ownership and control. In fact, the Canadian government puts a lot of importance on that, and we completed the assessment and we're successful. And also we completed the financial requirement fitness test that they do. And stage two, now that we completed that stage and they gave us, what the financial requirements are, the stage two, which we'll be working here over the next couple of weeks, is we'll do a second raise of fund, and you just basically submit your proof of fund to the CTA. And then they come back to you and they say, okay, you'll get your license as soon as you complete Transport Canada, and you get your operating certificate. So the Transport Canada one has 5 phases, and we completed the first 3. The biggest one being phase 3, which is the submission of manuals. There's tons of manuals, thousands and thousands of pages when you add them all together that needs to be submitted to Transport Canada. And I won't go into too much detail into this because it gets very technical, but let me put it this way. When the PAT does anything, it's prescribed. When he wants the co-pilot to do something, the words how to proceed is prescribed. There's checklists, those are the words you use. This is how you ask for it. This is how the sequence of events in your pre-landing, after takeout check, and so on. All this has to be described in your manuals. How you're going to train the pilots, what you're going to do in the first day of training, second day of training, first simulator, and so on. Same thing for flight attendants. So once you finish submitting all your manuals, which is a long process, but it's all done, all the manuals are complete, and they do their assessment, then they do a performance assessment, and they'll come and monitor your first pilot course, which we did in February, and they say, okay, show me that you do what you say you're doing in your manuals, right? And so we did that. We did the first 2 parts in February. They completed their ground school, completed their simulator, and received their certification on the Airbus 320 successfully. We are just received about a week ago conditional approval for the flight attendant course, and the conditional approval is just because they need to monitor the course, and then you get full approval after. So we're starting our first flight attendant course next Monday, on April 18th, and that will also be monitored by Transport Canada. Once the flight attendants have completed their training, we need to do a ground evacuation demo. You put the aircraft in the hangar, turn the lights off, and you go through a simulated emergency. You have to deploy the slides. They have only so much time to do it, and Transport Canada monitors that. And the next step after that is a single flight for flight attendant, line and dock, where they get new flight attendants we take them up flying, expose them to turbulence and simulated turbulence, and then emergency descent and different things like this that the Transport Canada wants to see. It's about, I would say about an hour and a half flight. And then after that, we'll need to do 1 or 2 demonstration flight where the pilots will pick a route the transport want to see without passenger, which could be, take the airplane from Toronto to Halifax and back. Show me that your system, your flight planning, everything you say in your manual, all works in real life. And once you complete all that, then just so you get into phase 5, they just create the paperwork. That phase is not very long because all the work has been done before, and they issue with your operating certificate. And we target the completion of phase 5 for June 2022, so that we're in a position to start flying in July.
So the phase 5, that means you've got the green light to go. You can start booking and scheduling your flights out there. You've gotten Transport Canada approval to operate as an airline.
You got your operating certificate, you're good to go. There's audit that they'll do every year. Pods are being checked every 6 months in the simulator and so on. But yeah, you have your operating certificate from Transport Canada, so you can start operating.
So we were discussing this ahead of the webinar, and Duncan was making a comment that the airline industry is a highly regulated, sort of unregulated industry, where 40, 50 years ago, you couldn't choose what prices you were doing, and that the sort of the commercial aspects were highly regulated. That's or largely unregulated now. But the safety and the performance and stuff, that is still of the highest standards on that regulatory side.
Extremely regulated, regulated. As I said, all the pods, the flight attendant perform their duty in what sequences, and in some cases, what words they use when communicating. All that is in the manuals.
Yeah. And I guess that's what makes the airline industry, despite some bad headlines occasionally, one of the most safest means of transportation around, is that they don't let the market forces do this. They make sure everything planes stay up in the air.
Yeah, absolutely.
All right.
I'll turn it over to Duncan.
Yeah, so thanks, Eddie. And Martin, thanks for the opportunity to talk about where we're headed here. You know, one of the things that we really have spent a lot of time on is really coming up with our direction and how we want to be positioned in the marketplace. And comfort, value, and guest experience really resonate high with us. You know, we are not a low-cost carrier. We are not a ULCC or an ultra-low-cost carrier. That is not our business model. We think that there is a niche market for us in the value-based leisure travel. And as we come out of COVID, we expect, you know, some of the highest demand in history in terms of consumer demand. And we're already seeing that in a lot of markets around the world. You know, if you look at the US domestic market, it has certainly recovered. You know, the markets that struggle today are the international markets, which, you know, we will not be participating in as we launch the airline. So we feel we are extremely well positioned. We feel that we have a tremendous product, and Eddie talked about it a little bit earlier, as we're talking about the comfort of the passenger has been forefront in what we're doing. So everything from the seat, from the pitch and the onboard experience, we are going to have something a little bit unique and different as it relates to what we serve on board the aircraft, and I'll talk about that in a little bit as well. You know, our objective is to create.
Sure. Just you threw out some, you're value based, but you're not low cost or ultra low cost. So you're not going to be the lowest price when I go onto Expedia or whatever. You'll be a competitive with. You're not going to be $500 when everyone else is $400 for a flight or so. You'll be in a competitive place, but you're not going to be the lowest, but you're going to have a good flight experience. So good value for your money.
Correct. We're not going to lead. We're not going to lead the market into low, unprofitable fare levels that don't make economic sense. I think that's the point that I want to deliver. Is we're very focused on EBITDA, which is a very important metric for us in terms of our shareholders and stakeholders. The fact is, we want to operate a very profitable airline. We want to deliver value back to our shareholders, create capital, and create retained earnings that allow us to reinvest in equipment to grow the airline. So that is really our focus. We're not chasing $49 fares. That's just not a model that we believe is sustainable with the cost structure. Even with our low cost structure, we don't see that as something that's sustainable. Now, we will focus on not only base fare, but also ancillary. And I'll talk a little bit about how our fare bundles will work and how we add value, and where consumers see value, they'll add on to the base fare. And I'll talk about that in a little bit in a couple of minutes. So again, you know, we want to profitably grow revenue in line with the growth of the airline. airline. So Eddy talked about our cadence of adding aircraft at 5 per year up until we're around 20 aircraft. And again, that's something that we're very focused on, is making sure we have the right growth. We have the infrastructure in place before we add the assets, and we have all of the distribution partners that we need in order to profitably fill the aircraft. So again, I talked a little bit about where we want to go. We want to introduce flights this summer. Markets that are important to us would be Mexico, the Caribbean, and as we add fleet and as we go through the CTA process, we'll look at other markets in Canada. In 2023, we'll have scheduled operations into the Caribbean, Atlantic Canada, and Western Canada. And in 2024, again, we'll look at the growth of the leisure market in Western Canada. Again, we think there's tremendous opportunity across the entire country, both on the East Coast and the West Coast, where we think there's opportunity for some underserved markets. And then in 2025, we'll continue growth to top US and Caribbean destinations.
Duncan, sorry, going back to that. So for 2022, 2023, all your flights are going to be leaving out of Toronto to various destinations. I'm from Vancouver. So in 2024, that could be the year where you'd maybe do a Vancouver, Cancun flight or something like that.
Yeah, that's correct. We're going to look at all kinds of opportunities and charter opportunities. We could find ourselves with a charter opportunity from Vancouver to Miami, as an example, or we could find other charter opportunities. But our hub will be Toronto. We will base ourselves out of Toronto, and that will be the core of our business. And we will operate into US, Caribbean, and Mexican markets from there, as well as Canadian markets once we've passed or gone through the CTA process.
Right.
Okay. So here, one of the things that's incredibly important for the success of the airline, and you talked about a little bit earlier, Martin, when you talked about aircraft being full. The reality is a drugged monkey could fill an airplane. What you need to do is fill the airplane profitably. And so if you think about some of the airlines in Canada that have gone bankrupt over time, some of them have gone bankrupt with 90% load factors. And the reason for that is it cost them $1 to put the product in the air, but they were selling it for 40 cents. And so volume doesn't help me. What helps me is profitable revenue on every seat. And so again, whether the load factor is 85% or 75% isn't really a predictor of load factor. And that's something that we really want to coach and manage the expectation of potential investors is load factor is not a determinant or doesn't determine profitability. What determines profitability is the right yield on the right aircraft at the right time. And so that's what we're very focused on. So again, going back to our ability with SysAIO, our ability to manage inventory, our ability to merchandise and display, and partnerships like Soft Voyage, which puts us on the desktop of the majority of travel agencies across the country, allow us to distribute our inventory in a very economical way and put our product in front of consumers in a format that will allow us to be profitable. So again, it's extremely important that we have the ability for consumers to transact with us the way the consumer wants to transact. So if they want to transact with us through the travel agency community, which is an incredibly important part of our distribution plans and our strategy, we will embrace the relationship with travel trade and travel agents because we know how incredibly important they are to the success of our airline. So in order to do that, we have to be able to put our product on the right desktops. And so again, we'll do that through API direct connections. We'll have our own website, which is jetlines.com. We'll also have we own our own tour operator, which is called Canada Jetlines Vacations. And again, we'll have product and inventory for dynamic packaging. And a lot of that's going to be powered by partners like Soft Voyage on their CREV and TTS platforms. And again, that's a B2B platform as well as a B2C platform. And what's also important is we'll have consumers have the ability to book with us directly as well. And again, what we want to create is great value. We want to be able to package products that include ancillaries such as seat selection, meal selection. If somebody wants to bring their golf clubs or their water skis or whatever it is, we have a product and a la carte menu that will allow them to do that.
Are your seats going to be available on like Expedia and online third-party distribution apps, or is that part of the race to the bottom?
No, Absolutely not. Expedia is a very important distribution partner for us, as are other OTAs, as well as high street travel agencies, as well as home-based travel agencies. Again, the travel trade community, regardless of platform, is an important part of our distribution strategy. We want our product in front of customers. We want travel agents to know about our network. We want them to know about the experience, and we want them to know about the different attributes of the airline. Again, we're not selling on price. We really are talking about creating an airline based on comfort, value, and guest experience. And that includes the onboard experience as well. So that's exactly what we're trying to communicate through our distribution channel. There's nobody better to explain our product than travel agents. They know the business, they know the product. Consumers can get comfort in terms of what's going on relative to the ever-changing requirements around travel, whether you have to have a vaccination or not, or whether you have to have, specific tests. And again, that changes all the time. And I think what we're going to see is we're going to see consumers working with travel agents in order to make that booking so that they get comfort. I think there's unfortunately during the pandemic, consumers were confused and there was not a lot of great communication going out, which created a lot of bad equity between the consumer and airlines. And so the benefit we have is we don't have any of that bad equity. And we want to work with our partners and make it very transparent to consumers, the flexibility of our fares. So go ahead, please.
You mentioned tour operators, and I see that on in one of the lines here. Is that part of a package deal for whatever, $2,000 a week in Mexico? You get your all-inclusive hotel and the airline with Canada Jetlines, that sort of a thing?
That's exactly correct. So we will have Canada Jetlines will have its own inventory dynamic packaging capability, and we'll also distribute our product through tour operators. If you think of companies like Red Tag, a perfect example here in Canada, and in the US, companies like Fareportal, again, very strategic partners. Expedia has a packaging capability. Online travel agencies have packaging capability, as do other travel agencies across the country.
Right.
So in terms of how we plan on getting the best yield out of our seats is obviously we'll have a base fare. We'll look at ancillary revenue. And as you know, Martin, ancillary revenue has become incredibly important for the airline industry over the last 10 years. And so as airlines unbundled the seat from ancillaries, airlines have been able to generate a significant portion of their revenue from ancillaries. And again, that's important from a consumer perspective because the consumer pays for what they need, also what they place value on. So, if you're a consumer who jumps on a flight down to your home in Florida and you don't have any luggage, historically, you were subsidizing everybody else who had 10 bags, as they're taking their families down to Florida. In our model, consumers will add on what they deem valuable to them. And if it just is a base fare that they're looking for, they just literally want to jump on the aircraft. They've got their briefcase and suitcase. They're going to their home in Florida. They don't need to bring a bike or excess baggage or anything else that they don't place value on. Then they don't have to pay for it. And so as we move people through the fare families that we've created, it allows us to yield up, and it also allows us to create value and a great experience for our customers.
Is there competitive advantages how people bundle it? Sometimes with airlines, I feel like you're kind of, there's one more thing there. Or is there like how you respectfully bundle it or package a deal? Like it's just nice and straightforward. You get this and this, and it's a clean menu as opposed to sort of what it feels like a hidden cost?
Yeah, so absolutely, Martin. I think that's an important distinction from us and, some low-cost carriers around the world who really nickel and dime the consumer to death. We have very clean value propositions from a base fare all the way up to our most expensive bundle. And again, it's what the consumer sees that has value. So, if checked bags is something that's important to you, or seat selection, or buy on board, or travel insurance, we'll be able to offer all of those ancillary products to our consumers. And the consumer will be able to choose of those what's important to them. And we will definitely be avoiding the nickel and diming, which really erodes equity from the airline and from the customer experience, which is something that we're trying to avoid. Okay, next slide. So again, we talked about this a little bit. I don't need to spend a lot of time on this. We will have, and as you would expect, our own website where you can come and find information about Canada Jetlines, about our products, about our services, about what we're doing relative to the environment, how we plan on aligning ourselves with different partners. Another great example of a partner that will deliver value is a company called Uplift, which will allow our consumers to pay for travel over time rather than having to pay for it up front. So, we're delivering all of these different partners from a very vast network of partners, from travel insurance, from financing options, from hotels, car rental companies, and all of those different products that consumers want to experience. Tourism assets are also an important part of why people fly. We've aligned ourselves with some tourism boards and airports and CVBs in different markets. So that would allow us to, again, tell the story from the lens of the destination, as well as create a great experience for our customers and why they would want to book and fly with Canada Jetlines. Okay. Again, I won't go through the detail here, but obviously what's important and what contributes to experience and product are all of these elements here. Again, I talked about the PSS. It just couldn't be more important. And distribution partners like Soft Voyage, again, an incredibly important partner for us in our ability to package dynamically and build a story for both B2B and B2C customers, credit card processors, allowing consumers to pay the way they want to pay. And again, we've had an amazing reception from travel industry partners and travel agents across the country, whether they're consolidators or OTAs. They're very eager to work with us. They know that we have a very seasoned management team. They know that we're going to be successful in the marketplace, and they've aligned themselves with us early. The same would be true for hotels. The hotel partners that we are speaking to are incredibly excited about having new partners in the market as well. There's a lot of new hotels that are being built. A great example is Hilton. Hilton's built a number of properties and taken over the management of a number of properties. And again, they're extremely excited to be working with us as well. And as you can see, the other key assets and key tourism assets are listed there below.
Okay. Well, thank you, Duncan. So just to summarize here, I think we gave a good overview of our strategy, where we're at. The next step, as I mentioned before, will be our financial requirement for the CTA, complete the Transport Canada and CTA process as we plan to do it by early June, so we can have a launch date for the summer of 2022, and implement our growth plan with additional aircraft in the fall of 2022.
You mentioned July of the launch. Does that mean, is that when you'll start marketing your planes, or are you going to start actually flying some routes starting in July? You expect to?
So what you can do here in the next few weeks is we will, you can get an exemption that you can apply to CTA as you get close to your launch date, so you can start marketing and selling seats. So we're not there yet, but we certainly would like to be there in May. So as we get closer to finalizing the process with Transport Canada, you can go to the CTA and get permission to start selling.
So you could start selling before July, but then the plan is that you'd actually have planes and paying passengers flying places in July.
Yeah, exactly. So we already have the plane. We're doing the training for the flight attendant here starting next week. So as I mentioned before, their flight attendant training will be done, and we can do the ground evacuation demo towards the end of May. So I do believe that by the time we get closer to mid-May, as you get to the end of the process with Transport Canada, that would be a good time for us to go to CTA and say, okay, we're almost there. Can we start marketing our flights for this summer?
Have you announced yet where your first flights are going to be going to? You've talked about general areas, but you haven't actually announced specific destinations.
No, and you can't until basically you get the permission of the CTA to do that. So we won't announce anything for a few more weeks.
Gotcha. And I guess there'd be some competitive considerations to make regarding that as well.
Yes.
Yeah, and I think I would just add to that as well, Martin. You know, we've built relationships with airports, and we're very excited about those relationships with those airports, and we're looking forward to announcing them. And whether those are obviously in the Caribbean or the U.S., again, some really great partners that we've aligned ourselves with. We're in discussions with obviously airports across Canada, again, who are very eager for us to operate into their airports. So we are looking forward to making those announcements with our partners at the right time.
All right.
Well, Martin, we have Ryan in Miami with us here. I don't know if you want to give a chance for Ryan to say a few words. Or
Hi, Ryan. So just an introduction, you're on the board of directors. I believe you're the CFO of Global X, and that's your association with Canada Jetlines. Thanks for joining us. Any sort of, you've listened to most of the presentation. You hopped on a little late. Any comments you'd like to make or thoughts?
Well, I will be real quick so we can get to questions. But I think the idea behind Canada Jetlines was envisioned when we merged with them back in 2020. Was we really saw an opportunity for a leisure carrier in Canada. We saw the way to enter into the market was through the charter, was through the model we're using, lower utilization, take advantage of distribution. And we think the team that's been put in place is fantastic. We think it's Canadian, as we've seen in the news. That's pretty important. And it's structured in a way that's compliant with the Canadian laws. So I think they're well positioned to take advantage of what's coming.
All right. Thank you. In terms of you're getting ready to launch, and many of the people that are watching this are looking at it through the lens of an investor, what does the first couple years, and I presume you're not giving any specific guidance, but what do the first few quarters or year of Canada Jetlines kind of look like on a financial basis? Can you give any indication of how many flights or planes you need in the air till you hit kind of break even? Any kind of perspectives for an investor to look at the company with?
Sure, we can get Percy to talk a little bit about that, but of course you need more than one airplane to get to profitability. But I'll give a chance to Percy to talk a little bit about that.
Sure. So yeah, in the first couple of years, you need at least 4 or 5 aircraft to break even and start making inroads to the profitability. We will get there pretty soon. As you saw, our first few years, we have 3 aircraft this year, 4 next year. So we should be hopefully profitable by the end of next year, or at least start making a positive contribution. And the break-even point is somewhere in the range of 4 to 5 aircraft. So I would say end of next year, we should see some.
And Martin, I think it's important to understand why we launched with 1 aircraft. I think Canada Jetlines attempted to launch prior, and it didn't work. And one of the reasons is because they were so ambitious with their initial launch plan. The next phase of certification is you have to demonstrate to the Canadian government you have a certain amount of money in order to start. Now, if you launch with a really ambitious plan, as Canada Jetlines did before, that number was $40 million. And the flaw in Canada Jetlines before wasn't the business model, it wasn't the team, it wasn't the process, it wasn't the procedure. It was the inability to raise $40 million of venture capital in Canada from a Canadian investor. It just doesn't exist. There's just not the market for that kind of money. So the reason we're launching with 1 aircraft is our number is not 40 million, it's like 4, right? And so what the trick is to get launched, get the certificate, and then grow the business, right? And so by launching with 1 aircraft, we made the hurdle much lower, and we made it so the amount of capital required to get off the ground is significantly lower, which is why we thought this is the best approach. The other advantage current Jetlines has is about $25 million was spent in the previous iteration. That money wasn't wasted. That money is being used. That's why we're able to get to stage 4 of certification for the amount of money we've raised today. Most airlines, it would cost them between $20 and $30 million to get where they are today. And Canada Jetlines has done it, managed to do it with less than 5 million, which is a stunning amount to be able to launch an airline inside of Canada, which, as you can tell, creates a significant numbers of barriers and makes it very, very hard to start. So I think the team got together, and we when we looked at it, we figured this is the smartest way to get certified with the least amount of money. So you get that. Once you have that piece of paper, then you can go acquire aircraft, you can acquire more people, you can expand routes, and it's completely de-risked for the investor profile simply because you don't have that certification risk or that compliance risk. With that risk out of the way, it's easier to raise money. It's easier to generate the interest that you need in a company. So I think it's a testament to the way the team put this plan together, and why it's such a unique opportunity, because there's really two ways to do this. You can either come with $100 million and go all in day one, or you can do what we've done with less than $5 million, get certified, get launched, get started. And in the end, you'll probably deploy significantly less capital to get to the exact same place.
With the you mentioned $4 million or $4 or $5 million. Is that's how much you're going to have to raise in the next round to sort of to satisfy transport?
It's not necessarily what we need to raise, but it's what you have to demonstrate to the government you have access to. So that can be in the form of debt, that can be in the form of equity, it can be in the form of cash, promissory note. So there's a bunch of different ways to do it. But I think the key highlight of that is it's a significantly smaller number than what Jetlines tried to do before. So I know there's kind of an overhang of past Jetlines investors saying, oh, this, they fail. Well, it wasn't necessarily a failure. It was a square peg round hole. There just isn't the risk capital in Canada to go raise $40 million on this kind of venture. So we went with a mannerism that requires significantly less cash, but allows you to get to the same point in 5 years.
Gotcha. And are you that money you're going to raise or have access to that? How far into your business plan does that capital get you? How much more are you going to have to? Any guidance on how much you'll have to raise to get to that break-even level in roughly 2 years or a year and a half?
Well, I think if Global Crossing is any indication, is kind of Global Crossing is about a year ahead of what Canada Jetlines did. It's a function of speed, right? And so you can go slower and kind of spread it out. But I think what we're going to find is the opportunity is so great that we'll probably want to accelerate bringing money in and once you're operational, you have access to different types of capital and different types of partners. And so, but you have to get the piece of paper. Without the piece of paper, you're just an idea, right? And so the key is to get the planes in the air, demonstrate what Duncan has put together as a distribution channel that allows us to sell the tickets. We think there's a niche market where there's a completely underserved distribution group that allows global, Canadians to buy a ticket through the ways they buy tickets versus having to go through Air Canada and having to go through WestJet, which, I think some people would rather look at alternatives. And I think I think the way this has been structured has been very thoughtful and provides a really good opportunity in what some perceive as a very crowded space, but we don't think it's that crowded. I think there's a huge opportunity for a number of aircraft being operated in this manner. And I think we're pretty excited about what the team's put together.
Given the strength, the relative strength and concentration of power of two airlines in Canada, or do I get from you that their strategy has been kind of to drive people to their website so they don't have to pay as much commission and partner fees and that sort of a thing? Well, you're taking a bit of a different approach. It's like, hey, let's embrace the community and get our partners to bring business to us. Is that kind of the idea?
I think Duncan can talk to that best. Yeah.
Yeah, I think, look, what we know for sure is there's an incredible, powerful distribution out there. And a structure of travel agents that have a very large customer base. Our ability to get to all of those and do it on our own at less than 4% of revenue would be a near impossible task. And I think the ability for our travel trade partners to tell our story, become brand ambassadors, and support the effort and the product we're putting in the air makes tremendous economic sense. We also think that the travel agent is an incredibly important resource for consumers as we come out of COVID. There is a tremendous amount of anxiety still for consumers to book with confidence. And I think that the travel trade gives them the opportunity to explain what's happening, explain the flexibility of our fares, the network, and the product that we have. So the travel trade is incredibly important. Now, in saying that, we will have our own direct channel, which consumers can book with Jetlines directly, and there are consumers who prefer to do that. And so again, I go back to the point where we want to put our product on the shelves of where consumers want to transact with us. Some consumers are very confident and can book directly online on a supplier's website, such as jetlines.com, or we have those that really want the comfort of having a conversation with a travel agent. We'll also have a call center, and so consumers can contact our call center and make a booking through our call center. So again, we want to put our product on as many shelves as possible and ensure that those who are booking with us are booking with confidence and understand exactly what it is they're buying, so that there's no disappointment.
Right. That makes a ton of sense. What does the charter market and the other sort of, there are the big two in Canada, and then there are charter lines and so forth. What does that marketplace kind of look at us, and how do you kind of differ from those providers?
So, a charter airline by definition would be doing strictly charter. Somebody would come, say, I charter your entire airplane. I take care of selling the seats. All right.
So a charter is basically, I just go, I'm going to rent this plane to go here and there. If nobody's in it, you're still going to get paid. And if I can fill it up profitably, then I'll make money off of it. You just operate. You supply the flight attendants and the pilots.
Yes. So, if somebody wants to charter an airplane and it happened to be, one of the days in the week where it's not busy, we'll absolutely do that, and we'll be looking for those opportunities. But it's not the business model. It's not strictly what we're going to do. But Duncan, you want to go a little bit?
Yes, I think a good way to think of this, Martin, is we would have almost consider it like a scheduled charter. So we would operate into destinations, and in some cases we would have a partner that may take risk on that flight. And so, as an example, let's say a travel agency or a tour operator said, I want you to fly, and I'm just going to make it up. They want to fly to the East Coast, and so we would be able to provide that operation at risk with that agency partner. They would take full risk. We would get guaranteed revenue on that operation. And that agent would sell every seat. So obviously we would want that agent to be successful and sell every seat and be profitable on the operation, so that we could continue that relationship. Now, there are other scenarios where we could operate a scheduled service to that same destination, where a particular tour operator might decide that they only want to take 40 seats on that aircraft. And again, we would sell them a block arrangement, and they would be responsible for those 40 seats. Whether they sold 20 of those seats or 40 of those seats, Canada Jetlines would get paid for the 40. And again, those types of relationships only work if they work for both parties. And so we would want that partner to be successful in order for us to continue that operation. The other opportunity for charter is when we have excess capacity and we have airplanes sitting on the ground, and someone says, look, I want to fly a sports team down to Fort Lauderdale from Toronto, and we're willing to leave at 8 o'clock at night. And we have an airplane sitting on the ground from 5 p.m. till 7 a.m. the next morning. We would sell that operation. And the person or team that chartered that aircraft would pay for positioning. Again, that's another business model that is accretive to a scheduled operation.
All right, that makes sense. And so in the leisure market, who are the big competitors in Canada beyond WestJet and Air Canada?
Well, I think you've got the Transats of the world, and obviously Sunwing. The Sunwing WestJet merger, we'll wait and see what that looks like at the end of the day. But those are the kinds of operators that we're talking about. And again, their model is still a little bit different. They do international. They have wide body aircraft. They have narrow body aircraft. They've done some strategic relationships in the case of Transat with Porter, and obviously the merger between WestJet and Sunwing. We'll see what comes out of that. For us, again, we think that we've differentiated ourselves by the product on board, by our distribution strategy, and about the experience that we're trying to create for our customer. Our ability to hold the hand of our customer from that first interaction all the way throughout their journey is something that, again, we feel is a competitive advantage and something that we're focused on. And, we have a guy who's running that for us, Anoop Anand and Michael Levine, both extremely experienced in service delivery, and again, creating a very, very unique experience for our customers. And again, it's not just words. We are trying to create a unique experience, not only for our customers, but also for our employees. When you have an organization that people want to come to work to every single day, it's a very different environment for those that you serve and those that you work with. And Eddy's done a phenomenal job creating the culture of this organization. It's something that's incredibly important to him. And so that resonates throughout the entire organization. Eddy and I have met with every single employee that we've onboarded. And that's been an important part to make sure that we get the right DNA in the organization. And again, it's something that I credit Eddy with, which is really the culture of the organization, which again, will set us apart.
All right. And that'll be a direct, the consumers, your customers will be able to see that in terms of how pleasant the staff are and those 100%. Sorts of things.
I often use the example of, going to your favorite restaurant. The price may be good, the food is good, but if the service is not good, you're not coming back, right? Yeah. And creating that right culture is extremely important to our success. We managed to do it in Vietnam, as I said before, where we got an award for service within the first year. And you're only successful at that if you engage with the employee, make them feel part of the team, take the time to meet with every one of them so they feel engaged. And, Duncan and I and the entire management team strongly believe in that and we'll spend the time to do it right. And that's what we've been doing.
All right. So we're well over an hour here. I think we've been quite thorough here. I'd just like to wrap things up with A, if we've sort of missed any points that you want to highlight, and B, we've hit them, but for investors, the next couple months are going to be pretty important as you hit some key milestones with Transport Canada. Can you just sort of summarize or review the key milestones we're expecting to hit over the next few months?
Yeah, so the key milestone with Transport Canada, we're starting the flight attendant training next month. That should be completed. It'll be monitored by Transport and should be completed by the last week of May, at which point we'll go into a demonstration of ground evacuation, of a demo flight, and complete the entire process with Transport Canada in early June.
All right. And then you'll announce, hopefully before that, your first flights, and then you'll start flying to your initial destinations in
summer, in upcoming summer, yes.
Yeah. And I'm guessing your flights in the summer are going to be different than where you're going to be flying to in the wintertime. Presumably in the summer, you may be flying east-west or somewhat south, and then in the winter, it could be more tropical type destinations.
Yeah, there's some markets that you can serve the entire year going south, but there's no doubt that the focus increase on southern destination come the fall.
Yeah. I think, Martin, one of the interesting things about the Canadian marketplace is there's a very distinctive bell curve relative to demand and very distinct seasons in terms of domestic travel. And so when we're in those shoulder and low periods, that's when we have the ability to point aircraft in the south in order to flatten out that demand curve. And that's something that is an advantage for us in the Canadian marketplace relative to having a profitable airline every month of the year. And so historically in Canada, it was very difficult to make money outside of the summer period. But what we know is that we can point aircraft at high demand markets in off-peak and low periods where, again, we can maximize profitability for the airline and be profitable in every single month. That's the intent.
So before we wrap it up, is there any other points you'd like to highlight before we call it a day?
I think we touched on pretty much everything.
All right. Well, gentlemen, thank you very much for taking the time to chat with us and explain not just your business plan, but sort of some dynamics of the industry. So we've learned more about the airline industry, the travel industry, and then most importantly, Canada Jetlines here. So thank you very much.
Thank you. Thanks for having us.
All right. Cheers.